Now for global business updates, Rotus Oddiri joins us. Good morning, Rotus.
Good morning, Dr. Abate. Good morning, Ayo. Good morning, Rufai. Good morning, all our viewers out there. We begin in Asia, of course. The markets were pretty mixed today, following another fall in Wall Street yesterday, even though they started off on a bright spot. So if you look at the number of the indexes in front of you, from the Shanghai Composite Index over to the Hang Seng, both were positive. 9 basis points to the good over in China, about 22 basis points to the good for the Hang Seng over in Hong Kong. But you see the Kospi in Korea, the Nikkei 225 in Japan, and the ASX S&P 200 in Australia, all falling. Now, for Australia, stocks and currency seems to have a inverse relationship. If we get to the Australian dollar, it actually appreciated this morning by about, basis points or so against the US dollar. And that is based on inflationary concerns over in Australia. I think the Reserve Bank of Australia in their last meeting actually held rates in place. But if we take a look at a quote from Sandra Bullock, did I say Sandra Bullock? Isn't that the actress? Michelle Bullock, excuse me. Michelle Bullock, the governor of the Reserve Bank of Australia. She said the board, that's referring to the board of the Reserve Bank, remains vigilant with respect to upside risks on inflation, and we will not hesitate to raise rates. So, of course, as you know, conventional wisdom, if you raise rates, you make your securities more attractive, which of course would make your currency more attractive, because people will be demanding your currency in order to take advantage of those higher rates for your securities. So basically that's why we see the Aussie dollar gaining against the US dollar, and then Australia, and then stocks falling, because conversely, as you are raising rates and making your currency more attractive, you're also raising costs for businesses, which will impact publicly traded companies and their bottom lines and what they can share with shareholders. So we move from there to the entertainment sector. Warner Bros. Discovery is facing some real issues. Remember, they had a merger back in 2022. Company, the value at that time was about $40 billion. Market cap now is about 18 billion. The stock is down about 34%. They took a massive impairment charge on their goodwill in their second quarter results, $9.1 billion. So if you take a look at Warner Bros. Discovery Q2 earnings, total revenue coming in at $9.7 billion. Their TV network revenue, and this is where the impairment charge was basically on the valuation of their TV assets. That's TNT and some other networks. 5.27 billion in revenue, but down 8%. Now, an impairment charge is basically accounting. When you take a write down on goodwill, it impacts your balance sheets, and you have to record it as an expense on your income statement. So that's where the 9.1 billion was recorded. Basically, and then you see the loss for the quarter was at $10 billion. The stock fell. This is an issue with legacy media and basically the impact of streaming. Yesterday, the day before yesterday, we saw Disney raising prices for Disney Plus, Hulu, ESPN Plus. Netflix is also raising prices. So there's more competition for streaming now, and it is impacting legacy television. Let's take a look at a quote from David Zaslav, who has been under a lot of pressure. He said here, it's fair to say that even 2 years ago, I think that's when the merger took place, market valuations and prevailing conditions for legacy media companies were quite different than they are today, and this impairment charge acknowledges this. The market conditions within the traditional business are tough. As for the Chief Financial Officer, Governor Wiedenfels, he says this: am I disappointed about the impairments? Yes, it's an accounting reflection of the state of the industry. There's been talk about recovery in traditional television market a year or a year and a half ago. It really happened. Also, they're carrying a lot of debt. Gross debt after the merger, because when you merge, you are taking into account existing debt for both companies, was about $40 billion. Cash on hand as of the second quarter, only $3.6 billion. In the second quarter, they only paid off about $1.8 billion in debt. So David Zaslav is under a lot of pressure. And basically, this is just a reflection of where legacy media is versus where things are going with streaming. Let's round off in Nigeria. The Central Bank of Nigeria completing its, returning to the retail Dutch auction, where it goes out to banks and say, hey, bring me your qualified bids for foreign exchange. So if you take a look at some of those details, total bids bids coming in at 1.8 billion from 32 authorized dealers. About 876 million of those value were qualified. So from about 26 dealers. The remaining 6 were disqualified. That's about 313 million. They were disqualified, some for not meeting the cutoff time, others for using the wrong form, wrong templates, this and that. The cutoff rate was 1,495 per dollar. The naira did appreciate to about 1,596 against the US dollar. So look, still by and large, the issue here, of course, is these for the bids that are not met, there's still dollar demand for those bids, right? So we'll have to see how things go forward. By the end of the day, Nigeria just needs dollar supply. And then the domestic bond auction, domestic bond offer, this bond that Wale Edu has been talking about for a while to target domiciliary account dollars, diaspora dollars, and so on. Business Day did get their hands on the documents and took a look at some of the details. So $500 million Series 1 domestic bond, where they're saying it could go up to as much as $2 billion, supposed to debut later on this month. Seeking domiciliary dollars from Nigerians at home, also diaspora Nigerians abroad. Now, this was a question. It's benchmarked against the Euro bond yield. So you have to go to the debt management office, check out what Euro bonds are doing. I think they're in about, somewhere between 8-9% last I checked. Minimum subscription is $10,000. Subsequently, $1,000 thereafter. We'll have to see how things work out. Remember, the IMF did say, hey, listen, you could be putting more pressure on the exchange rates with this bond, but then we'll have to see how things work out. That's our updates for today.
Okay, sad reality, Rotus, we need dollars. So we're going the route of the bond market. We're going the route of, Dutch auction system, again, pretty much reminds me of the Obasanjo days, pretty much a system that we had used in the past to be able to cushion the effect of things and all of that. But the main narrative will need dollars. So how are we going to get it? Obviously, since the NMPC, they're supposed to be bringing in the dollars, has become money borrowing institution now. They are the ones borrowing dollar. They are not bringing in the dollar any longer. So should we look away from the NMPC, or should we hope that this rigmarole that the Senate will do in terms of investigation is going to make anything happen? Like I said, a part of my soul believes it's going to be off the mic. A part of my soul, but another part of my soul is optimistic. So where do we look at? Probably mining. Is there anything as regards mining? Is there anything as regards tech? Is that quick enough? Where can it come in? Because we need to find a way of cracking this dollar. Probably agriculture, value added. There should be some possibility in there. But the question you also ask me is, have we been able to feed ourselves? So where are the sectors? Because it's obvious that this government is clueless as regards where the dollar is going to come from. That's just the problem for me. That's the scary part. And the oil, since the oil that's supposed to normally bring in the dollar, NNPC is not pushing its weight. I remember during Buhari's time, Buhari kept on arguing that it's because crude oil price has not gone to $100 per barrel. That's why we are not doing well. Now, it went to $100 per barrel. The next thing they blamed, because of the Russian war, nothing happened. They started blaming crude oil thefts. So I'm confused as it is as regards the state of Nigeria. And these monies are there to be made. We shouldn't be having this suffering.
All right, in terms of, while we were speaking, I just thought about 2 areas that this administration is looking to when we talk about diversification. We looked at manufacturing, we looked at the creative sector as well. And I bring the creative sector up because of your story with regards to Warner Brothers Discovery. And it just begins to open up our minds to the future of whether streaming platforms, the way that the creative sector is going to change, especially with regards to television and access, and how looking at the trends, especially with drops, the drop in stock prices, that we need to begin to think of what the future of TV would be, especially the impact it would have on the creative sector and revenue generation. Rotus, I know the conversation around even the impact on cinemas, the future of cinemas, how movies will be received, whether it's by online streaming or going to the cinemas, how that will be affected, and how that portends for the Nigerian market. I say this because this administration has invested a lot of money in the creative. We have the IDICE, the Digital and Creative Economy Fund. And in terms of the projects that would emerge, let us begin to take into account what the next few years would look like. and begin to innovate in that era, in that regard. We've often talked about the fact that the creative sector is a multi-billion-dollar sector if only we can invest in it. And taking lessons or borrowing lessons from, realities of strong companies like Warner Brothers that made money, through traditional releases, now suffering because they're not able to innovate or perhaps even pivot to the reality of how people receive it now, is something to look at. Perhaps the future for Nigeria, especially for creatives who are looking to go into that industry, is to begin to think of online streamings, movies to homes immediately. I don't know how long the cinema industry would thrive for much longer in the country.
Okay, very quickly, just a couple of follow-ups. Yesterday, you were talking about China trade. Let's start with international commerce. And the fact that China got US dollar denominated exports going up by 7.2%. Higher than expected, and imports, I think it's imports rising. Imports rising more than, exports. Now, the explanation for that the National Bureau of Statistics is giving us this morning, is that it's because the yuan has become stronger against the US dollar. So, offshore yuan in Hong Kong index has gone up. So, because of that, it doesn't make sense for Chinese small companies to export. So there, we have in China now, from the report in the second quarter, fluctuations and issues with foreign exchange. So that's the explanation that we've been told this morning from the story you brought yesterday. The second story yesterday was about the market correction. And I was quoting Peter Oppenheimer, the global equity strategist for Goldman Sachs. Well, it looks like that market correction of yesterday, the rebound, has failed. Because as of this morning, the Dow Jones Industrial Average has gone down by 0.1%. Nasdaq Composite has also gone down. All the indexes, including S&P 500, have gone down. Now, what does this mean? What we see is that Treasury yield is still up. Oil price is still up as a result of the crisis in the Middle East. So Peter Oppenheimer may well be correct to say that the market correction that we're witnessing is inevitable and it will take some time. Another interesting story is that Warren Buffett, now through Berkshire Hathaway, has more Treasury bills than even the Federal Reserve. Small range Treasury bills. Berkshire Hathaway is ahead of the Federal Reserve. And in any case, they have a massive cash reserve as a result of the fact that, Warren Buffett sold his stocks in Apple. So he made a lot of money. Finally, in Kenya, President William Ruto is facing a double whammy. He has had to drop the finance bill. The appeal court has also ruled that his tax propositions are illegal and unconstitutional. So how would William Ruto fix the debt challenge of $78 billion that he faces? That's the big problem there. Well, thank you very much, Rotus.